The San Jose real estate market is being a little unusual. We've got high interest rates, record low inventory. What does that mean for prices and the forecast going forward? Stay tuned. Hi, I'm Theresa Wellman with Homeowner Experience Real Estate. Today we're getting into the closed stats for May 2023 for the San Jose real estate market. We're going to start at Silicon Valley, Santa Clara County data and break it down into San Jose single family homes and then the condo townhome market as well. We're going to talk a little bit about the economy, the median prices, the trends, and how much year over year the things have changed. So let's go ahead and get started right over here to the computer screen. So here you're looking at a chart of Santa Clara County from 2000 all the way through current closed sales of May 2023. The orange and blue lines are our prices. And as you can see here, we're starting to see some signs of leveling off. But if you go back in time and you look at history, there's a very cyclical cycle with prices typically peaking sometime in the summer. So seasonally, I'm not surprised. It's about time for these things to top off. And you put that in perspective with the interest rates and it makes total sense. So let's talk a little bit more about that. Right now, the supply is very low, 647 homes. And that is just no May on record, anything like that. The pandemic Mays were in the 700 to 970 range, and we're still under 650. So quite a bit lower even than then. And in May 2019, we were 2 times that at 1450. So as you can see, this inventory is really squashing the market. But to the contrary, it's actually keeping the market moving at a somewhat healthy normal because interest rates are so high and the demand is just lower right now too. So let's look at those interest rates. I keep talking about them. The conforming loan rate has gone up and up and up the last few weeks. And you'll see that at 6.79% is the average 30-year fixed mortgage rate right now. Ouch, right? Now, the jumbo market's a little bit different, but we're seeing 6.25 on average for a 30-year fix and just a very tiny benefit for getting an adjustable rate mortgage at maybe 6.125. So not much huge difference there. And buyers are going to be really picky on home prices and condition because it's costing them so much more to get into a property today. We also want to look at the economy because if the economy is affected, then the demand goes down and that also can change our market going forward. But we're continuing to keep a watch on that. And it actually went down in April compared to previous months. So we're at 2.9% unemployment rate. Still really fabulous. Now we're going to dig into the San Jose stats, so stay tuned. So here's a chart of the San Jose real estate market. And as you can see, I've highlighted here those prices again. They are starting to turn just like we saw in Santa Clara County. I think in San Jose, we're seeing a little bit more of a drastic turn there, especially in that average point, we're seeing an actual downward trend. Is that going to continue the next several months? Well, you got to stay tuned and keep watching these videos to get the latest data. But my guess is, again, it's very possible because this time of year, sales do tend to peak and supply though is really low, but unless interest rates change, we're gonna probably follow the general trend. So one last point on this slide is the sales, as you can see, have been the highest we've seen in 2023. So that's a good sign that buyers are out there shopping, but it's still significantly lower than previous years, partially due to just the lack of options and selection. Let's look at the actual stats here. So the average price for San Jose came in at $1.647 million, just slightly down from last month and still 11% down from last year or year over year. And that was before prices really dropped. They were starting to go down in May, but they didn't really hit bottom until later in the summer, early fall. Now we're still seeing 5.7% overbidding, and that's again just the supply and demand imbalance that we're seeing and the days of inventory of only 3 weeks of inventory. It's pushing a little competition, especially on those nice, well-priced properties that are pushing buyers to pay a little bit more. 346 sales, and that is up from the previous month as we saw on the chart. And inventory is still very low. And look at that, half inventory from last year. Yes, significant change there by far. But the sales, as you can see, are also down, but not proportionally, right? So we're selling more now relative percentage-wise than we were a year ago, which is interesting. All right, so based on these trends, I wouldn't be surprised if we continue to see the prices drop down, or if interest rates do get better, which could happen, then I wouldn't be surprised if prices go back up. So it could be a very weird year, highly dependent on those interest rates, which are affecting the monthly affordability of buyers. So let's get into a quick snapshot of what's going on so you have a relative signal of the market. Now, the price trend is sort of heading sideways, so I gave it a little sideways aerial. I don't know what that means yet. Could just be seasonal. Let's keep watch on that, right? Sales price to list price ratio is actually up, but just a little bit. So that's a positive sign. Days of inventory, only 3 weeks, a very positive market sign. Unemployment being down, super positive sign as well. And interest rate change is just what's really kind of putting a hold or question on the market there. So it'll be interesting to see in July what our year over year was, because that's when we really saw the price hit last year, and to see if we start to actually recover some of that price difference and maybe what interest rates do if the prices go back up. So let's talk about the condo market. And before that, let's talk a little bit about the forecast and what I see coming forward. So what I've been saying is if supply continues to remain low, then demand is likely to push prices up, which is what we saw, right? We saw that here going on. And then unless the interest rates improve, that could change it. Right now, we're not seeing that, so I put a question mark there. And if unemployment stays below 5%, we're still going to have decent demand for those who could afford it. It's not as big a demand as there was a year ago, but it's still pretty good, strong demand. And so that's also positive. So looking forward, what do you think? I think the biggest market indication and change is really going to be about interest rates. If we look at some of these forecasts here that I reviewed last month, a lot of experts are expecting interest rates to decline through the end of the year. Some people saying conservatively only to 6% and then maybe 5.6% in 2024. Others say 5% somewhere in the end of 2023. So here they just say rate volatility. This one also says the end of 2023, 5.2%. So if we really see that significant of an improvement in the interest rates, the market is definitely going to pick up, and likely prices will pick up. For sure, demand will pick up. It's just a matter of whether inventory picks up to tamper that a little bit. So let's talk about the condos and townhome market. Now, condo and townhome market is still seeing a very similar thing. Supply is very low. And put this in perspective. If you're an owner of a condo or a townhome and you want to move up to a single family, it's really hard to do that right now because you probably refinanced last year or bought last year when the interest rates were super low. So to go ahead and make a purchase up in price plus double your interest rate is really hard financially. So it's really keeping our inventory very tight. And I don't see that condo townhome inventory is going to loosen up anytime soon because of that. That has really shot up prices. And the interesting thing is, we're going to look at the data here, that the year over year decline is a lot less. It's only 6.5%. And again, I just think it's because it's really tight inventory. And that's where most first-time home buyers are getting into the market. So the average price is doing pretty well at just over $1 million, 3.4% over on average. Still very tight of 23 days on days of inventory. And the closed sales were up and the inventory is down. And again, sales are down a little bit more than they were for single families, but the inventory is about the same. It's about half of what we saw before. So quickly to point out what we see here with this continuing to increase, we see multiple offers and again, just a supply and demand imbalance that's making it a little competitive in the condo and townhome market. If you're looking for insider information to start your home search, I highly recommend you check out my home buyer guide. I've recently transferred it to my website and linked a whole bunch of resources to help you get started. One of those first critical steps is to go through our buyer consultation, and there's a link to more information about that. Or if you're thinking about selling and you need a home seller's consultation, we offer that as well. Check out the links below. Thank you so much for joining. And until next month, we'll continue to watch those interest rates, unemployment, and see what happens to our home prices. I get a lot of requests asking how to keep up to date on our content and local events. So I recommend you sign up for our education-focused newsletter at homeownerexperience.com/newsletter. Once you do, you will get educational videos, including professional insight on the San Jose housing market, interviews with experts to educate homeowners, and get invited to our local events. Our mission is to revolutionize the real estate experience for you through a focus on education, transparency, and an unwavering commitment to your success. And the newsletter is a source to tie all the content together for you. Sign up, and if you don't like it, no worries. Unsubscribe anytime.